Hello and welcome to Profit Plus. Today, we're diving into one of the most talked about stocks in the tech space, Micron Technology, MU. With a significant earnings report coming up on December 18th, Micron has been making waves. But the question is, should you buy Micron before the earnings report, or should you wait? In this video, we'll break down Micron's performance, what investors can expect, and whether now is the right time to invest. Let's get into it. Micron Technology has been on a roller coaster this year. As of now, the stock is trading at a forward price-to-earnings (PE) ratio of just 7.95. This is considered an undervaluation by many analysts, which begs the question, is this the right time to buy in? Micron has been facing some challenges, but the company's fundamentals are looking strong. Its market cap stands at $12.2 billion, and despite some recent struggles, the company has shown strong revenue growth in fiscal 2024. Operating income reached an impressive $1.5 billion, up from a loss of $1.5 billion during the same period last year. However, it's important to note that this stock has underperformed recently, dropping nearly 28% over the past 6 months. The market sentiment seems to be cautious, especially with concerns around the cyclical nature of the semiconductor industry. So, why are investors still interested in Micron? It's simple. The semiconductor market is booming, especially with the increasing demand for memory chips driven by artificial intelligence, AI, and data centers. Micron is positioned to benefit greatly from these trends. Micron's high-bandwidth memory, HBM, is in high demand, and it's expected to continue growing, with HBM's total addressable market, TAM, projected to reach over $25 billion by 2025. So, despite the current dip in stock price, Micron's position in the market looks promising for the future. The company is also seeing demand for DRAM and NAND flash memory in devices like smartphones, PCs, and data centers. With advancements in AI and the ongoing digital transformation, demand for Micron's products is expected to rise significantly in the next few years. Looking ahead to the earnings report on December 18th, analysts are expecting Micron to post revenue of around $8.7 billion. Micron has forecasted earnings per share, EPS, of $1.54 for the upcoming quarter. While the stock has faced some volatility, the strong outlook for the future could indicate an upward trend post-earnings. What investors should be focusing on, however, is the forward guidance, particularly how the company plans to handle its increasing capital expenditures, CapEx. Micron is heavily investing in expanding its manufacturing capacity, which could be a game changer for future revenue growth. But there's a catch. High capital expenditures are always a risk. In the past, companies like Intel faced significant challenges with ramping up production. But with government incentives and the increasing demand for memory chips, Micron is poised to capitalize on these investments. Still, it's important to assess how effectively they can execute these plans before making a decision. At the current price, Micron stock is trading at a discount, with a forward PE ratio of just 7.95, which is considered cheap compared to its historical average. Additionally, the company's discounted cash flow, DCF model, suggests an intrinsic value of around $149 per share. Given the cyclical nature of the business, Micron could see a significant upside once the semiconductor cycle enters a more favorable phase. The demand for memory chips, driven by AI, cloud computing, and the growing need for more storage will likely continue to support the stock in the coming years. So, should you buy Micron now? The stock is undervalued and its long-term growth prospects look solid, especially with the rise of AI and digital transformation. If you believe in the future of memory chips, Micron could be a great buy at its current price. If you're a long-term investor, buying before the earnings report may be a good opportunity to capitalize on its growth potential. But, as always, there's risk involved, and you may want to consider a more cautious approach, like buying half before earnings and the other half after, to reduce the impact of short-term volatility. That wraps up today's video on Micron Technology. Do you think Micron is undervalued, or are you waiting for more stability before investing? Let us know in the comments below. And don't forget to hit the like button and subscribe to Profit Plus for more insights on the stock market and investment strategies. I'll see you in the next